Good morning, everybody. Good morning. Good morning. This is Signet with the Bullish Bears. It is Thursday, 10/17/2019, 8:20 in the morning. Goldman Sachs had its earnings this morning. Netflix had its earnings last night. Did pretty decent. There's been a little bit of economic news, but not overly drastic economic news. Taking a peek here at the Nasdaq. I often use the Nasdaq as my indicator, like other people would use the RSI or maybe a stochastics. The uh, the Nasdaq is my indicator of choice. Looking at where we've been and where we're going, where we're at right now, is my way of analyzing the market to determine where we are going next. Places we could pause, reverse, get hung up. So you can see with the early news, we had a nice pop. It couldn't sustain, started to fade back down. I wouldn't be surprised if we close this gap between where we ended yesterday at the close and where we will be opening this morning. So we're testing that quarter range right now, 79.75. We're only up $25 on the day. When I'm trading futures, I tend to look at the futures in a grid of 4 like this. More often than not, one of them will bird dog. And what I'm looking for is, I'm looking between the 4 of these, which one is leading or which one is trailing, signaling weakness, signaling that a move is going to fail, signaling resistance. So you can see that they're moving in step. And what we're looking for is right now, say on the ES, price would be pushing up. It has this price shelf in the way, right? That pivot point right there. So looking at that, I can come down here to the Russell. It also is pushing up, but it has already passed that lower pivot point. In fact, that lower pivot was where the Russell found support. So the fade down wasn't as strong in the Russell, and the move back up would be looking at this area, right? So they're not in sync in their resistance and support areas. If we come over to the Nasdaq, you can see same thing. The S&P faded stronger than either one of these two. In the move back up, it's been really weak, and it ran into that price shelf, that pivot point. And the Dow, closer to the Nasdaq or closer to the S&P, also faded below that pivot and now has that as a resistance. There's times where you're not going to get a signal, or there's just not going to be enough information to pull the trigger on anything. But with the Nasdaq, we're getting rejected at the 75. That rejection, if it's not strong enough, is going to be what turns us lower. Give me a moment. I have to throw a little chat into the room. So if you're a new trader and you are limited in your funds and you're having a hard time with options, think about everything that's standing in the way. What's the problem? Well, the problem is you probably have a day job and you can only trade options when the market is open, and that's most likely when you're also at your job. So then you're trying to do your job, but you're also trying to trade. Futures trade 22 hours a day. You can trade them before you go to work. You can trade them when you get home from work, before you go to bed. You can swing trade them. You can day trade them, whatever. The second thing about futures, you only need a $250 account to get started. Each contract costs $50. So I could go in here, pull the trigger with just one contract to go short, just like that. Right? That's it. you start trading futures, you start using an active DOM, the DOM here, the active trader. Look, I'm short one contract. Now, this isn't the micro, this is the mini. So I could just flatten out of that and go over to the mini. I've noticed a lot of people think that the futures are some different, unusual, or complicated beast. They're not. You don't have to learn anything new or special to trade futures. If you've already been trading, then you've dealt with futures. Think of the Qs. The QQQ, that's the NASDAQ. SPY, that's the S&P 500. So you could go in and you could trade the MNQ or the MES, and you could start making money on a leveraged product. When the MNQ moves $1, I make or lose $2. With the MES, if it moves $1, I make or lose $5. All right, so we want to trade things that are leveraged. We want to do anything that we can with our small account to grow it. With 3 contracts on the MES, for every $1, I make $15. Okay, that's how easy it is to start growing your account. You could use one strategy and look at one market, the ES, and you could trade it 22 hours a day. And there's little risk. And what I mean by little risk is I could put this to 1 and I could just get in here and pull the trigger on the trade. This thing could go completely against me from 2298 all the way down to 2297. What am I going to lose? If that's a whole $1 move, I'm going to lose $5. That's it. So, you know what I mean? I'm not risking a lot. What is that? I can't even go to McDonald's for $5. It doesn't have to be hundreds of dollars at risk every time you pull the trigger and get into the trade. And if we step back and we look at the ES, look at how much it's moved today. Look at how much it moved yesterday. So even trading one contract that makes or lose $5 per dollar, you can still make $50 to $100 a day, which isn't really the point. We want to look at things in a percentage. If you grow your account by 20% every day, you're a beast. You're beating Wall Street. And it doesn't take very much to grow a $250 account by 20% every day. You can do that in 45 minutes to an hour and be day done. You can get in and out of the market because there's no PDT. I can get in and out all day long. The commissions are only $1.22 round trip. Look, I made $1.25 already. The commissions are paid already. I got into this trade at 2998.75. I can put a stop in to make sure that I don't lose any money once price gets above my entry. You can see these 2 dots right there. That's where I got in. So once price moves up a little more, I could put a stop between me and price, and at that point I couldn't even lose money. I would be locked in, guaranteed to at least make some profit. You notice I haven't put a stop in. That's dangerous. In the current market, one tweet could send us crashing down. This is a pivot point low, 29965. So I'll put in a stop below that, 299.625. If the market suddenly drops because of a tweet or some other economic event, it'll kick me out right here. Notice I didn't set that stop based on some arbitrary 2-to-1 ratio or any other crap. I want to give this room to move. I want to stay out of the way. And I need a stop in place just to protect me from a tweet. I'm underneath the VWAP and I'm underneath the current price shelf, the pivot point. It's good enough. If price comes down there, I don't want to be in the trade anyways, right? If it breaks this support line here, maybe I I don't want to be there. You see how much easier this is than trying to deal with options? Yes, futures are different. They move in ticks, right? You hear different language, ticks and points and handles. It sounds all confusing. It's not. The reason that we call things ticks and points and handles is because if I say to you, I made a $5 move in the ES today, you're going to say, so what? $5, who cares? But when the ES moves $1, you make $50. So if I said I made $50 per $5 move and it moved $5, what is that? 50, 100, 150, 200, $250 in one day, in one trade. So how do we get through that language barrier? Instead of me saying, hey, I took a trade in the ES for $5, I'd say I took a trade in the ES for 5 points. Because then a person understands, oh, 5 points and it's $50 a point. This person just made a $250 trade. All right. So that the language barrier doesn't have to be complicated, and it doesn't have to stop you from getting into this futures market. Okay. Don't let fear of the unknown stop you from doing this. Everything that you search for on the internet when it comes to trading is going to point you to options, because this is new. The MES came out May 9, 2019. All the media places that want to sell you something or that want to convince you to get into options, they just want the eyeballs, the clickbait. They want you to sign up for something. They're so outdated that there's places out there still pushing premium trades. Oh, you should sell options. Forget it. You want to trade a leveraged product. If you have a small account, you can't trade with the big boys. Recognize that. But the futures are where you can change your life. The reason for that is with one strategy, you can grow a very small account like $250 up to a $2,000 account. The significance of that is it proves that your strategy works. It proves that you can trade on a good day and a bad day, that you know when to stop, that you know when to cut your losses, and you prove to yourself that you're an actual trader and not just someone who's jumping into the market and jumping out of the market with absolutely no goddamn idea of what you're doing. So by the time you grow that account to 2,000, now you can start trading minis instead of micros, and then you can start bringing in $1,000 in 45 minutes. I paper trade the minis every day. I keep a small account, so I trade micros, but I trade minis on a paper trade every day. I practice my skills. I test the strategy that I use every day, and I'm day done at $1,000, 45 minutes every single day before the bell. It's literally that easy. So you can see here I got in at 2,998.75. I want to put a stop between me and that. So right now, with that stop in place, I cannot lose money. I can't. Now, price can come down and knock me out. My commissions would be paid for, and I would call that a dud. Right? I didn't lose money. I got my commissions covered, but I didn't make any money either. All right? So you could swing trade these in the overnight. You could get into the trade, let price get far enough away from your entry to put in your stop, go to bed, wake up with money, right? Or wake up with a dud. Depending on the broker, you could, lock in your trailing stops or whatever. Don't let this unusual thing or something that you don't know hold you back. There are places and there are people who can help you learn and make this a part of your daily life. Remember, trading is something that nobody can take away from you, and it's also something that is all on you. Your wins and your losses are your fault. If you lose, there's nobody to blame but you. If you win, there's nobody to blame but you. So take that. Take it. Own it. Be comfortable with the idea that what you're doing is based on your own initiative to learn, to step above, to ask questions, to follow up, journal your trades so you can understand your wins and your losses, and grow. When you run across something that you don't know, go hunting for the answers. Everything that you want to learn about the market is out there. Everything. Now, strategies might be something you have to pay for. There's different places out there that want to teach trading systems and things like that. They want you to pay for it. But learning the market, all the information you could ever want to learn the market is free on the web somewhere. All you got to do is search for it. Now, the problem with that is that most new members don't know what to search for. All right. So I've been working to put something together. You go uh, into my Discord, and you'll see a ton of content in there pointing you in the right direction. But you can always just ask too. That everybody's here to help. And quick disclaimer, the Bullish Bears does not have and will not get Discord. So don't send emails to the boys saying, oh, when are we going to get Discord? We're not getting it. I have one. They don't. They're not going to get one. So don't bother them with it. That's the disclaimer that always has to be given. So let's take a look at the market. See what's going on. Economic calendar for the day. If you don't know how to get to the economic calendar, you go to Market Watch, calendar, uncheck the box, and click Econoday event. We've got quite a bit of data coming out today. 8:15 will be the next one. We already passed that. Thinkorswim's just a bit slow getting it off the line. What else we got? Natural gas. I don't trade natural gas. With futures, you can trade just about anything. Coffee, corn, soybean, gas, natural gas. I don't mess with any of that stuff. I just trade the index futures. So a lot of treasury, a lot of bond, government debt, that kind of stuff. I'm not real interested in that. I don't expect too much influence on the marketplace because of these. But they're all coming out at 11. So if you're getting ready to pull the trigger on a trade and it's 10:45 or 10:50, why not sit out until 11, right? Let that pass. Make sure that you're not going to get whacked by something. And besides that, Europe closes at 11:30. I use Webull to keep track of the foreign markets, so Asia, Europe, all of that. Trading futures, the Asian markets come on at night, which is nice because it gives some volatility for us if the market's been kind of laggy and not really moving after the close. When it opens back up around 5, it'll get kind of slow. And then Japan, Tokyo comes online at 6 o'clock my time. That'd be 7 market time. And then Hong Kong comes on at 8 market time. And that's nice. That's a nice little pop to the market. A lot of times you can be day done in the evening just from those pops. So this is Webull that I'm looking at here. I don't use Webull in my trading. They don't do options yet. They keep saying they're going to. But they have a real user-friendly interface. And I like this. I didn't have to learn anything. I didn't have to go out and study what all the different markets are in the world and then try to hunt for their symbols. It just has it all organized and nice and neat for me in one spot. Boom, right there. And I like that. It's comfortable. And they got a decent screener. And then it does a really good job of giving me the pre-market data and the earnings for the day. So you can see the sectors and the industries here, which ones are hot, how many markets are in that sector that it's showing. Earnings, IPOs, dividends, news. Webull is just a really great, simplistic tool. And like I said, I don't trade with them, but I definitely am glad that I have an account with them. And it's not even a funded account. It didn't take any money to get the account going. I really like. I get trade ideas in here from time to time, and offers short float in the data. And we were talking about this yesterday in the day trade room, that a lot of the penny stocks that we would trade, they're so volatile because of the short float and people getting short squeezed. So Thinkorswim has a horrible job of showing that kind of information, but Webull doesn't. It's typically right over here in the analysis. Now, I haven't been over here for a little while, so I might have to turn the one on that I'm looking for. Let's go to something else. So, Goldman Sachs had earnings this morning. We'll go over to Goldman Sachs. There we go. Goldman Sachs support and resistance on major time frames shown right there on the app. They got analysts' estimates, price targets, short interest to cover, short interest there, and then your institutional holdings. What else we got? So just everything right there at your fingertips, and really nice. Webull is definitely something that I like to keep around. If they go into options, which is what I've been waiting on, I will cancel my Robinhood account and transfer my trading over here. But until they do options, I'm not interested in using it for my trading. So I'm looking at Goldman Sachs. They did have earnings, and they got shuffled around a little bit, but we're not seeing that massive move like we saw in the other banks when they reported. So not too bad, though. With the good economic news that we saw pop the market and the banks doing good, we might have a pretty decent day in the marketplace. All right. So trade list, and you'll notice that there's a date on the list. And this is a hand-screened selection of markets that have decent options and decent volatility. Thinkorswim does an okay job of allowing you to scan for different products. But what I went ahead and did is I went through the NASDAQ and took out the top 100 and then went through their options listings to determine if they were liquid enough in their options and added them to a list. And then I took just your basic Dow 30, threw them in the list. It's not too bad. It's starting to pile up a little bit, getting a bit deeper. I think there's 200 and how many is it we got in here? 260. So it's not a too bad of a list. There's enough there to keep us trading pretty decent. We've got 130, 136, 271. So 271 markets are in that trade list. That's not too bad. All right, so we walked over the futures. It's something that I've been really pushing towards new traders. I mean, the issues are clear, right? Last year when I started trading, I started with $300 and a Robinhood account. And it didn't take me very long to realize trading shares with $300 wasn't going to make me profitable fast enough. So I needed to trade something with leverage. And at the time, there wasn't these new micro products. There was only options. And so I got into options, and I got right into option spreads because with $300, I really couldn't even trade naked calls and puts. I just didn't have the funds for it. So I started trading spreads right away. But now with these new micro products, there's absolutely nothing else worth even considering trading because these things are leveraged in a way that can make you decent money every day with very little risk. That's what you got to keep coming back to. How much risk is in the trade? With options, even if you're going to do a spread, you're still looking at $50 a trade, right? But with with the micros, you can you could limit yourself to $15 or $10 per trade, and you can just decide that's where your line in the sand is going to be and exit the trade if you take a $10 loss, right? If you take heat up to $10 and you just bail out of the trade. Options, the market has been moving overnight drastically, extremes from one direction to the next. You get into an options trade and try to swing that thing, by the next day, by the time the market opens the next morning, your trade is already crushed and there's nothing you can do about it. It's just not a optimal market to be trading. And that doesn't mean that we can't take swing trades. It just means we got to be very careful about how we swing it. And with a swing trade in a small account, that sucks because you need to keep your money moving. A small account has to get in and out of the market so you can keep that money flowing. You can't get into a swing trade that ties up your funds for 2 months. Otherwise, for 2 months, you're sitting around with nothing, no money to trade. All right. And then you're not growing your account because then you're getting what, 15, 20% profit on one trade and it took you 2 months to get it. So, I'm not against options. I'm not. My focus has always been advanced level options education and trading strategies. It's what I developed. It's what I was brought into the Bullish Bears to teach. But we got to roll with the punches and we got to recognize new tools when they come out. And this is the future. The reason you don't see it all over the internet is because all those places that want that clickbait, they haven't come around to, they probably don't even know about it yet. I find out every day that experienced traders don't even know that this exists. So get ahead of the curve, join into a trading that is going to allow you to utilize your weakness. And if your weakness is a small account, or if your weakness is that you're new, trading the futures means you only have to watch 2 or 3 products. You don't have to have trade alert services. You don't have to worry about what Facebook is doing, or trying to catch the momentum in 40 different equity products. You can trade one thing. You can take the effort and the opportunity to learn one single trading strategy, just one. And when that strategy offers you a trade trigger, you can get in, and when it doesn't, you sit out. You can trade for 45 minutes and be done, spending your time the rest of the day studying or hanging out with the family or doing something else. All right, so I've seen some questions pop up about Webull. Webull it's a broker, right? So just like getting Thinkorswim or um, any other application that you want to install, Webull is just like Red Bull, not Red Bull, Robinhood. You can get it for your phone, so you can go to the Play Store on Google Apps and get it. But it's also a desktop application. It's something that you can download and install. Let's go take a look at what's up with the market. Maybe we can get some trade ideas. Hot ETFs. Precious metals, 11 markets, all of them green. That's impressive. Look at that. 35 gold markets. I didn't even know there was 35 different ETFs for gold. Should have known. drug retailers, if we get a pop in that, we could get a pop in other things like United Health or Johnson & Johnson. Try to find some corollary. Earnings before the market opens. Philip Morris, Morgan Stanley. Those are the two big names on the list. But Honeywell. Let's go take a look at Team. And that got hammered yesterday. Nice recovery in the pre-market. This could be a mover today. If we look at the support and resistance on the larger time frame, you can see it sitting on that support. This fade yesterday down to the 120 range could give us a nice pop. And the overhead is clear. There's going to be a bit of a pivot right around that 129, 130 range. But the overhead resistance is at 150, so plenty of room to move. The analyst average estimate is 149. So you're looking at a good $25. Now, if you're in the Discord, you can type !shares space TEAM, and you can see the short float in a ratio. You can use the bots to kind of give you that information. It's got a 7.2% short float with a 5.5 ratio. So all the people who are still in this trade who took it short, they're getting squeezed hard right now. They're thinking about bailing out of their trade. Now, here's the deal. When they bail out of their trade, they got to buy back their position. So all of us who are looking to buy because of the pop, we're taking it up. And all the people who are already short, they're buying to cover their position. Right? So that's more buying. That's why keeping track of short float is relevant in the trading environment. So I can trade live right now because the futures market is open 23 hours a day. It only closes at the end of the day at each futures market closes at a different time, but the S&P or the Nasdaq, they close at 4:15 and they stay closed until 6 o'clock my time. That'd be, or 3:15 my time. They close and they open back up at 5 my time. That'd be 6 o'clock market time. From 6 o'clock p.m. until the next day, you can trade again, right? So I get up in the morning and I'm day done. I do all my trading before the bell even rings in the morning. That's what I was saying. A new trader who has a day job and is trying to sneak trades in when they're on their lunch break or they're on their 15-minute break with options, it's just too hard to do, right? You got PDT going against you. You got to try to catch equity markets when they're popping. You got your day job to worry about, and then it moves in the overnight and you're screwed. But if you get into the futures market, you can get in and out all day long, no PDT. It's got a low commission rate. You can start with $250 and you can take small risk. So everything negative about trading in a day trade is taken out when it comes to futures. And you can swing trade them. I don't know how many nights I've put on a trade and went to bed, locking in with a stop to where I can't take a loss. So, that feels real good to wake up in the morning and be up on the day already where my account has grown 40% overnight. That feels good. That's a nice way to start the day. there are a there are a few things that you're going to want to take the opportunity to learn about. Futures do have risk, right? Like I was talking about being prepared for a tweet. One one stray word from a Fed chairman talking to the media at a lunch can tip the market over. The president can throw a tweet out, can tip the market over. Um, Tariff news. So, the market can suddenly explode in one direction or another, and you need to have what I call disaster stops in place. And then you need to learn more about the economic calendar, because with futures, these reports, not the ones showing right now, but economic reports can spike the market 100 points in the blink of an eye. So knowing when these reports are coming out, knowing which ones are going to affect you, knowing when to just get out and sit out and wait for the report, that's a part of trading futures you're going to have to learn. It is critical that you understand when to get out and to sit out and wait for these events to go by. Because these events are almost like earnings on something like Apple, right? When earnings happens on an equity product, there is no hint at all which direction it's going to go. Literally, it could go anywhere. So, when these economic events pop, there's no telling which way it's going to go. It could be a good economic report, and yet the market might see that as a negative, because they might think, oh, we're not going to get an interest rate cut because of this really positive news, and then it'll tip the market over. So you can't just think you got it all figured out, just like earnings. Trust me, you don't have it all figured out. A market could have great earnings and have a negative forward projection of what they think the market's going to do in the future and tip the market over. Right? So that's why I don't trade before an earnings announcement, and that's why I typically don't try to trade these economic events. I sit out, I let price discovery happen, and after that discovery, then I jump into the market. I'll trade the volatility after the report, and after I see which direction the market's rolling. Right? That's it's the same kind of deal. We just want to protect ourselves and limit our risk. And so when we know that there's uncertainty, we just step aside. It's okay to say, I don't know. So when it comes to brokers, I did post, Webull, and I see someone helped me out and posted the Webull review from the Bullish Bears. Appreciate that, by the way. Your your broker is a tool. I've got multiple brokers for a reason. I have Ninja Trader, I have Tradeovate, TradingView, I have Tasty Trades, Tasty Works. I've got Webull, Thinkorswim. I've got accounts all over the place. And the reason I do is because each of those brokers offer me something, right? Thinkorswim gives me the ability to analyze options different than any other broker. But Tastyworks offers me better pricing and better visuals, so that when I'm wanting to share a trade, I can take pictures on Tastyworks, and it's also where my retirement account is at. Hey, good morning, Dan. So Tastyworks, it also has a lot to offer, and then for Tradeovate, that's my futures account, but it's also where I can trade futures options, and I haven't done that yet, but it's my goal. Right? That trading futures options is the end goal. It's my final destination. I haven't got there yet, but that's like taking the pill in the matrix and jumping down the rabbit hole. Uh, but each broker is a tool. If you've got a really large account and you can afford to use Thinkorswim to do all of your trading, then by all means use it. It's the Cadillac of everything out there, all rolled into one. But I have a small account and I can't trade futures on Thinkorswim. The contract pricing is just way too expensive. If we go in here and look at this, Thinkorswim to day trade futures on a micro account, you're looking at almost $700 to trade the S&P 500 for one contract. For a micro, I can do that on Tradeovate for 50 bucks. I can do that on Ninja Trader for 50 bucks. What about just the ES? The ES is going to cost me almost $7,000. $7,000 to trade the ES. It's too much. Now cost was the wrong word. They don't charge you $7,000 to trade the futures, but that's the margin requirement. They'll tell you, look, you need $7,000 in your account to trade one ES contract. Well, I don't have that. But on Ninja Trader, I would only need $500 instead of $5,000. Right? So that's why I don't do my futures trading on Thinkorswim. I just these margin values are too expensive for me, and so I use Trade of 8 or Ninja Trader, and I get my futures trading done there instead. Want to take a peek at IBM. They had earnings yesterday. Oh, we could get an opportunity here. So it faded down to this pivot point, price shelf here when we look left, right into this price structure here. Now on the last earnings, they got hammered pretty hard. No, that wasn't IBM that got hit at the last earnings. 3M got hit hard at the last earnings. And it turned out to be a pretty good play. So this is a solid institutional company here. This gets a lot of inside trading, and it gets a lot of oh, what do we want to call it? It's not eyeballs. That's not the word I'm looking for. It gets a lot of speculation from a lot of the media sources like Benzinga, Seeking Alpha. They're always doing articles on this. Investors Business Daily. You see IBM in all kinds of media reports all the time. And that's important, right? You want to trade things that not only are liquid, but that have a high volatility. So I was going to check the share on the Discord just because it's real easy to see the float there. IBM short float of 1.7, short ratio is at 3.99, call it 4%. This could find some support today, but honestly, I'm looking to take this in a swing probably around the 130 range. I'd be real comfortable doing something like that. On the longer term, the trading against IBM is like trying to trade against SPY, right? You wouldn't want to bet against the farm for the year. I really don't think, year over year that this thing is headed downhill. But a short term, yeah, we could absolutely take advantage of the situation. And you can see, looking at the point that I drew here with that box, getting down into that 130 range, we've got a lot of history there. So this should absolutely find some support right around that area. All right. Thinkorswim is doing a bad job of representing where price is actually resting right now. And you can see we're down at the 133. Kind of snap a line there just to give us some perspective on the daily. So this is where price is currently at. We're here down at the 130s. So looking for a drop down to that 130 or even into the 128 range, we're not asking for too much. If we was to try to trade this for Friday, could do a little bit of a at the money credit spread at the bell. And it's really important to point out that at the bell means you don't want to hesitate on this at all. As soon as the market opens, you're sitting right here ready to go, using Friday's expiration and putting on a credit spread to the downside. And you want to straddle it at the money so you can get as much credit as possible. So IBM has $1 strikes. This is good news. That way we're not putting too much at risk, and we got a really good price on it. It's 2 to 1. I should say 1 to 2. It's not perfect, but when you're putting on a credit spread, it's typically asymmetrical anyways. So we got to roll with the punches and take what we can get. The amount of risk you're taking here is the credit. That's all you want to risk, because we're dealing with Friday's expiration. So you don't want to screw around with this. It's just really important. You pull the trigger on this trade and you get $54 of credit. If the market starts to go against you, if IBM starts to rip to the upside, like it's doing right now, then it would eat away that credit, and then it would start eating into your own account. You wouldn't want to risk more than that credit. That would be your trigger to get the heck out of the trade. But now that we're actually getting some pushback here, we might want to reevaluate that situation a little bit. The institutional traders are not going to let this just fall to the wayside. You can use the Discord, use the exclamation point, and then type in institutions. Use a space and then type in IBM. And you can see the amount of institutional investors that are covered inside of IBM. And it shows it by shares, so you're not getting representation of the options world. All right, but I mean, it's Discord and it's a free bot, so you're not going to get all your information in one spot. But you could also go onto the options. What is it? The IOC, and you can look up options data there as well. So you gotta give me just a moment. I'm going to be opening up the swing trade room and kind of getting the room started for the day. So give me just a moment. This is usually when we start when I start fighting the audio errors. There's been a problem with the audio bridges in the swing trade and day trade chat room. I thought maybe it was just me, but Rose was having the same problem. Good morning, everybody. I need a sound check, please. Good morning, good morning. Can y'all hear me in the swing trade room? Thank you, Janet. Thank you, Lorraine. Good morning, everybody. It's Thursday, October 17th, 2019. We have earnings. We have economic events. Good to see everybody's up and running. How are you doing? I was taking a look at IBM just a moment ago and was discussing taking a credit spread at the open, and then it started to take a bit of a pop off of this low. So might not take it at the open. Still bearish. Still think this is going to fade down at least into the 30s, the below the 30s. But now I'm gonna wait for price discovery instead of aggressively jumping on it at the open. The VIX dropped below $14 this week, so looking at a VVS spread, and we're going to take a look at SPY and see if it's time for a new RTS spread. So let's take a moment, jump over to the VIX. 1365 is what we have on the daily. Since Thinkorswim is horrible at showing us the overnight hours, we jump into the pre-market here, see what's going on. 1360s, we're still below that $14 mark. Me, I like to wait until the VIX is below 13.5, but that's because I'm a very, very cautious trader because I have a small account. Anything below $14, we could pull the trigger to go long in the VIX plus 60 days. Like you've probably heard me discuss many times before, below $14, we immediately pull the trigger to go long plus 60 days. And anytime the market gets above 24.5, we immediately go short plus 45 days. We do that on instinct. You can just leave orders sitting down here waiting for the market to come down and get you, and take it long and take it short based on nothing more than that criteria. I have yet to lose a VIX trade. That feels really good to say that. I realized it yesterday. I have not lost a VIX trade, not once. That's an amazing win rate. I shouldn't say it, and now that I realize it, I'm probably going to screw it up and get a loss, right? Knock on wood. But I have not lost a VIX trade yet based on this simple criteria. And, simple is the best way to go. We don't want anything complex and get too silly with it. Very, very simple. Go long when it crosses the bottom line. Go short when it crosses the top line. That's simple. So we're in that range, and the trade, the VVS for us, for a smaller account, you probably can't do the VVS. It does take a little bit of buying power, but the idea that we can just go long even with a regular debit spread, absolutely. Right? We want to go, since we're going long, we want to go out to the 60s. If we was going short, we'd only go into the 40s, right? So probably the 33. And since the VIX is inverted, that means the calls are more expensive than the puts, which are completely different than the rest of the marketplace. And, $3 to $5 is typically what I want to do in a swing trade. The wider your trade, the greater the win rate or the probability of profit. Yeah, we want to say it that way. Probability of profit, not win rate. We can calculate the probability, by the way. If you haven't seen my videos on debit spreads and credit spreads, go watch those videos. In the videos, I show how to calculate your probability of profit. You could also just use delta. The problem with using delta is when you're doing a single contract, you can see the delta and you can analyze that and say that's your probability. But once you start doing a spread, then you're trying to figure out, well, now you got two deltas. Which one are you supposed to use? You could average it, add them both together and divide it by 2, and that would give you a pretty close estimation of your probability of profit. Or you could calculate it. All right, so either one of those would get you where you need to go. And how do you calculate it? You take the real risk divided by the width of the spread, and that would be your probability of profit. And what I mean by real risk is if we were looking at a credit spread instead of a debit spread, this is not your real risk. Right? This is a $1.50 wide trade, and I'm only getting $1. We can see what the real risk is. If I click the button, throw it in here, max loss is $50. It's the most I could lose in that trade. So that's my real risk. Oops, didn't want to save that. So like I said, the video is in the Next Level Training Library on the Bullish Bears website. And you can go watch those and learn the industry standard for debit spreads and credit spreads. And it's really a global standard. Options are traded around the world, and believe it or not, most companies trade the same kind of strategy. They straddle the money, they get as delta neutral as they can get, and they go out at least 20 days. There's criteria that's shared around the world because options have been traded since the 70s when calls came out, and then puts in the 80s, and the combination of those two and the different ways of doing it, all the hard work has already been done by years of people who are way better at this than us, right? Years of experience. Yeah, Vulcan, in the VVS, we sell the puts to finance this because, I mean, look how expensive that is, right? It's $1.50 in a $2 trade. So if your account's big enough, sell the puts to finance this. That way you're not spending so much money on it. But us with a smaller account, we really can't do that. You know what I mean? It's the buying power effect from trying to sell the puts to finance the debit spread. It's just too large, and we can't do it. And so someone with a smaller account would really just take the debit spread. Yeah, Gordon, I paper trade on Thinkorswim every single day, because I trade one strategy and I hone my skills on that strategy in any market conditions that I can, and I practice it every single day on Thinkorswim. But I trade live on my real account on NinjaTrader with micros. The same strategy, the same setup, the same triggers, everything's the same, but it's NinjaTrader, and that's Thinkorswim is a really great way to practice a strategy. And even though I've been trading this strategy now for, well, since May, I've been trading it since May, I still paper trade it because it's the one single strategy that I use. And I, I kind of tweak it sometimes. Maybe I test the waters with different ideas, but for the most part, I just do the exact same thing. And if you've ever been a gamer, say, with those games where you just got to grind away to get points, it's almost like grinding away to get money, right? It kind of feels the same way. You're just doing the same trade again and again and again and again. But, just grinding away. I like paper trading for, uh, for my practice because sometimes I get new ideas. I get to test different indicators, see how it might help me out. And it's effective when I'm trying to pair market breadth, because there's some days that market breadth does not correlate. And I realize that when I'm in a trade, even if it's a paper trade, it comes to my attention that, hey, we're not correlating with market breadth. And those are it's always nice to know that ahead of time. It was a bit of a surprise the first time that happened to me and it wasn't correlating. Yeah, I I spent 20 years in the oil field, but I've worked factories being a maintenance man. I've turned enough wrenches in my life. But I got disabled and I no longer can they my hands are pretty much broken. Um, the way the doctor described it is small joint manipulation. So trying to hang on to small nuts and bolts or use half-inch wrenches, I can't hang on to them anymore. Can't use the tools. So I don't do that kind of work anymore. Thankfully, I learned how to trade and I don't need to do that kind of work anymore. And I'm also still working on my master's in psychology so that I can deal with crazy people. And when I get my doctorate, I'll be Dr. Sig and I won't have to worry about it. She's doing really good. We're going to be seeing the heart doctor on Monday. I believe it's Monday. Um, there are still a lot of health issues, but she's home and she's breathing on her own. She's the physical rehabilitation is going good, so she's walking almost without a cane, able to get up and down the stairs from our porch. Just doing really good, really good. Still have a lot of health issues to deal with: the liver, the heart. There's some breathing problems, but yeah, she's doing really good. Thank you. Our kid is a mini Chihuahua Pomeranian mix who's named Marcus. He's our kid. The children are adults who have grown up and left the home, and in fact, just gave us a grandbaby last Friday. Grandbaby was born 7 pounds, 11 ounces, 20 inches long, and mostly healthy. Had a little bit of water on the lung, so we didn't get to see her. Well, we could peek through the window and see her, but we didn't get to hold her and all that. Pretty exciting. That was our first grandbaby. All right, so if you're not used to the way that I like to monitor the market, I'm really looking at the open to go into Market Watch and use the visualize to go over to you go Market Watch, visualize, set this to index, and then choose your market. Now, if using the AD, if using all of this is new to you, start with something that's small like the Dow Jones. The Dow Jones has the 30 mega markets. So Apple, Boeing, Caterpillar, you should be able to recognize every single market in here. Maybe you can't name all 30 off the top of your head, but you should know every single one of these symbols. Okay? And you should know what industry they belong to. You should know how they're doing. These charts should immediately come to your mind when you see JP Morgan, Coke, McDonald's. How are they doing? Microsoft, Nike. This is a part of being how do they say that? When you immerse yourself in an environment like a trading community, you start to pick up the lingo and you start to focus on things that other people focus on. As a new trader, we're kind of scattered, right? Everything seems like it's something we need to be looking at, and our head is just bobbing all over the place. But after a while, when you start to trade and you get more comfortable with the marketplace, you start to realize there really are leaders that the rest follow. Keeping your eye on these, you'll notice that when they are in sync and they are popping, so is the market. We were talking yesterday, which comes first? Does the futures move the equity products, or do the equity products move the futures? Which came first, the chicken or the egg? And the answer really is yes. Yes, sometimes equity products move the futures. Sometimes futures move the equity products. A really great example that I always like to use is Walgreens. Walgreens missed at the beginning of the year, and they dragged the Dow down 500 points while the rest of the market was going up. So Walgreens hammered the Dow to the downside. One market, just one, took the entire Dow out because it's a mega cap company. So each of these on their own could tip the market. Apple being critical. If Apple, so goes Apple, so goes the marketplace. Someone asked me yesterday to analyze Apple because they were thinking about taking a trade. And I said, well, we could look at Apple or we could just go look at SPY. Because if you're bullish overall and you're thinking that SPY is going to go up, so is Apple. So is Microsoft. Right? Because they correlate that strongly. Now, that doesn't mean that on their own, Apple could get news about, issues with their phone or something, and it could tip over and fall while the SPY would still be going up, right? But only to a point, because Apple has such a large cap size that if it was to get hammered, like when Boeing had airplanes falling out of the sky and it got hammered, if Apple was to get hammered like that, it would tip the market over. If it fell, so would SPY, so would the Qs, so would everything else. So the correlation is a give and take. Sometimes it's one, sometimes it's the other. We really can't predict ahead of time which one is going to be which. But keeping our eye on the Dow or the markets that are in the Dow, being able to recognize what those markets are, what industry they belong to, what sector they belong in, and maybe even a couple of their peers. All right, so say AMD. Everybody is always so focused on AMD. But AMD is a cheaper product, and it's hard to make money on the options in AMD in a spread. But you could go and you could trade MU, it's also a chip sector, and it's a little more pricey, but not extreme, right? It's not in the hundreds. So, there's a little more value here. It's a little easier to make money, and it doesn't exactly correlate with AMD as much as you would think it does. And then there's Intel. Right? So the correlation and the comparisons can be useful, can be helpful, they can hurt too. I'm not much into the chip sector. I tend to focus more on finance. And the mistake that I was making as a new trader is I would look at XLF, for an example, the banking ETF or the financial ETF. And in my mind, I instantly thought all finances would go into this, but that's not even remotely close to being true. If you think about credit cards, Visa, we'll just go out to the daily and jump through these real quick. You can kind of get an idea how much they correlate. Look at that Visa, MasterCard, American Express. Notice how all three of those charts are almost identical, and yet they are completely different than Wells Fargo, JP Morgan, Bank of America. And if you noticed, all three of those were almost identical, but they were not anywhere close to being what the credit cards looked like. So when I was newer and I would look at XLF and I thought that covered all of this, it doesn't. But when finance is moving and the credit cards are going up, when the banks are going up, I will jump on the XLF and trade the hell out of it because it's correlated, right? The opportunity to trade XLF, that thing moves overnight as much as it does in the daytime. And it doesn't have a very large ATR. This thing isn't a roamer on a normal day-to-day basis. It just doesn't move massively. And a lot of ETF products don't move massively, right? But on gamma plays, XLF is my baby. I love to trade this thing in gamma scalps because on Thursdays and Fridays, you can get a gamma up to $3. That's insane, which means a 50-cent move in this can give you 500% profit in a 50% move. A 50-cent move can give you 500% profit. I will take that bet any day of the week. That means you could be wrong 5 times in a row, and number 6 will cover all of your losses plus some. That's good math. You can scan for gamma products, and GERN is another one that often pops up on my gamma scan. But XLF, and right now it's sitting right at a round strike number, not the half strike, the round strike. So at 28 flat. I actually have shares of XLF because I scalped the options and didn't sell them at the end of the day. I took them into the money and took them, got assigned. I bought calls at $27 on Friday ago, can't remember which, a couple weeks ago on a Friday. And by the end of the day, it had moved up into the next strike, and I was assigned the shares. And I kept them. Why not? So now I've got shares, and I'm thinking about doing some covered calls on this. That way I could do a new video on the covered calls. The bell just rang. We need to see a little bit of price discovery. Netflix reported last night. So we could get some volatility in that today. Could have a good trade opportunity. GRTS is getting some volume, so a nice little heads up there if you're not already watching it. Just jumping through some of the news. And like I said before, the what is up here? if you're using the Discord, make sure you turn the alerts on for keeping track of Twitter and economic events. Vulcan, I'm pretty sure I covered that in the video, and I believe it's I believe you're going for 2/3 the width of the spread. That's what I believe it is, but it's been a while since I made the video. Yeah. So you should find that information in there. So Netflix gapped up into that price shelf right around the 304 range. It's super whippy right now, and as a day trade, you might get a bit of an opportunity to play this to the downside. I'd be looking for it to kind of level out, maybe around that roundy, the $300 range, and rally out of it. If it can rally out around that 300, you have a real nice play. But I would not get in it yet. Give it a little bit of discovery. The main thing I'm worried about when it comes to something like Netflix is the idea that it can close this gap. Now, it's a heck of a gap. It's $15, $20. But I can still hear Lucien in my head about markets wanting to close their gap. And, it's true. The volatility has dropped in here over 50% because yesterday Netflix had a volatility of 125%, which means if you had sold options, they would have lost a massive amount of value already and you would already be profitable. I don't trade before an earnings announcement unless I absolutely can get a really, really, really cheap trade, just because I'm not interested in taking that kind of risk. But that volatility dump really should have helped out the pricing in the options. So it's already starting to rally. It doesn't look like it's going to tag that 3. But this could be the trade of the week. It's Thursday, though, and I've been very cautious about any kind of swing trades unless they're plus 45 days. And the reason for that is just the market has been so whippy from one direction to the next, super hyper active. Any little bit of media and the market's changing direction, and that makes it really hard on an intra-week basis to do trades. But going 45 days out gives you plenty of time for the market to reverse again back in the other direction and help you be profitable. So with something like this, I'm looking for it to fade down, offer us a trade opportunity because I don't want to go long from the top. Just checking out a little bit of news. See if there's anything that we can play on. Is there any market you guys are interested in me taking a look at, maybe coming up with some trade ideas? Netflix doesn't seem like it's going to fade down to that 3, so the opportunity to get in, let's throw a VWAP on this so we can kind of get a base of where we're at. All right. So a more cautious trader would want to see Netflix break this Globex range here. If you were listening to me stream yesterday, you will know that I'm not a person who waits for the confirmation. I'd rather pull the trigger and just have my defined entry and exits already in place. If you wait for it to break and the break fails, you get stopped out, you take a loss. If you get in before it tests the break, then you at least make the profit from the move up to the test, which means you have the opportunity to pay for your contract fees at least, and then you get a dud, which is not profit but not loss. And I would take a dud over a loss any day. But when you're looking at the grand scheme of things, if to swing this 45 days, anything above $300 between now and the next 60 days should be more than appropriate, right? The problem is the implied volatility. You can see that we went from 0.6 to 0.35. It's a 25-point drop on the implied volatility average. So when we go in to take a trade like this, knowing that we're going to get vol crushed, it's important to understand. Right now, look, it's already dropped 10 more points since the last time I was in here. 65 days out. We want to be bullish. Let's see. Anything below 300 and even 305, really. I think we'll look at the credit and see which way we want to play this. $5 wide trade, $2 in credit, 64 days out. That's not bad. It is asymmetrical, but it's still not bad. Let's see what we can get at the money, which would be taking the 305, 300. We're getting an extra $30, closer to $40, but you got to ask yourself, is it worth that amount of risk? I'm only getting an extra $40. Is that enough? Or should I just stay back here, limit my risk, stay away from the market a bit more? Because look at the cushion here. I need price to stay above 300 between now and December 20. All right, and collected credit of 212. I like this trade. This one's going to go on to Twitter. So if you guys would give me just a moment to get this posted onto the Twitter feed. And by the way, if you're a member of the Bullish Bears community, you are paying for the trade alert services we push on Twitter. So as much as you might not like Twitter, make sure you're following us so that you get alerted to trade ideas and trade alerts. We do have our public one, though, and that's the one that you'll see Dan posting, like the morning gappers and that kind of stuff. But that's the one that we share, publicly. What I'm sharing here in this Netflix trade, that's only for members of the Bullish Bears community, and you don't want to miss those. I'm going to run with a 50% target profit. Yeah, that looks pretty good. Now, before I pull the trigger on that and send it out into the world, just come over here and take a peek. You can see that we're faded down a bit from the open. To get the best pricing on this, we really want to see this reversal start. We can get a good price when we're getting challenged like that, when the market is moving against you. people are more than willing to sell you a trade or buy your trade if they think that you're wrong. So we could get a good pricing in this fade, but we really want to just hang out for a moment and make sure that it's going to hold that 300. If Netflix fails to hold that 300, we really got to question whether there's enough institutional support and investor activity. For which broker, Bubba? For what? TD Ameritrade? For Thinkorswim? Thinkorswim uses a combined uh, contract for its pricing. So on the charts, to ask which one you're looking at, if you're only looking at the charts, it combines them, and you can see where it says active. That'd be the one that you're looking at. But you can get very specific. You can just copy ES 19, ESC 19, go over to the chart, and you can put that in there. That way you know exactly which one. And you don't have to question it. But from everything that I learned about futures on Thinkorswim, it's using a combined contract price, and that's what it's showing you on the candles. But yeah, that's how you can go in and get very specific about which one you want to look at. All right, so I posted that Netflix trade. We're looking at a 50% target. Just keep that Twitter up for a little bit. I might be back in there again. So if volume is your thing, I think we were going through this yesterday. Me and Cryos were in the day trade room. Thinkorswim does a horrible, horrible job of showing you order flow. The time and sales, that's worthless. Absolutely worthless. That's not even worth the space that I'm using to look at it. Level 2, worthless. Not worth the chart space to even have it on the screen. There's absolutely nothing I can do with that data, because the firm has 30 seconds to tell us that this order went through. 30 seconds. The market's recorded in billions of a second. Billions of a second. Orders can go through, and we don't hear about it for 30 seconds. And then the off exchanges, they have until the end of the day to report. So somebody could be sitting in here trading Netflix on an off exchange, and we wouldn't know about it until the end of the day when they give us their volume. So that is worthless. But if you want to keep track of something like the amount of volume and looking for a spike or getting an alert, I have taken the opportunity to develop quite a few volume indicators based on what Thinkorswim will let us use, right? Because, I mean, I can only develop an indicator that reaches the data that we can utilize, right? So here on the Discord, if you scroll down to volume, I've put in quite a few different volume studies, including ones that you can use for the scanner so that you can get alerts to unusual volume. Yeah, absolutely. Being on the wrong contract wouldn't help. Me, I don't use order flow in my trading, so I don't focus on that too much. What I usually tell people is if your strategy is some kind of scalp where order flow is very important to your setup, then you really want to go ahead and spend the money and get something like Bookmap. You're talking about $30 a month, and we both know that a 1 point move in the ES would pay for that, right? So if you're scalping and you want to be on the right side of order flow, then pull the trigger on a product that can actually give you that information. If you're going to try to pinch pennies and use something junk like Thinkorswim to do your order flow, don't be surprised if it bites you in the ass. Yeah, or maybe even NT. I know that the Lifetime has access to order flow in a way that the free version doesn't, and I have the free version. And so I'm limited. But like I said, I don't use order flow in my trading, so I'm not missing anything. But hands down, Bookmap, there's nothing else that can even come close to what you can get on Bookmap. I noticed some news on Baba. Oops. There we go. Alibaba. Alibaba faded down to the pivots from yesterday. Looks like it might be trying to rally off that support. And from Tuesday all the way back here. What am I thinking? Thinkorswim is laggy. Hey guys, if you're running a if you're running a bigger account, try taking a look at ThinkPipes. It's a Thinkorswim or it's a TD Ameritrade platform, a lot like Thinkorswim. It was developed in 2012 for institutional traders, but if you're running with a large account, you could possibly get access to it, and it has services and indicators and built-in features that this does not have. So I've never had ThinkPipes, but I've been doing more and more research on the different products that TD Ameritrade offers, and that's one of their products. $1.55 December 18 debit spread. Right on. A $3 wide spread for $1.55. That is not bad, dude. That is not bad at all. And December 18 puts you right around 60 days out. Now, going short, I won't even go 65 days. I'll run it more. I would go for the 30 if we were going short from the top, right? Because the volatility just can't sustain those levels up in the 20s for very long before it fades out. But I've learned that these lows, it'll come down and tap these lows, for a couple weeks at a time, and so I give it give it some room. Plus 60 to go long, plus 45 to go short. I can't believe that win rate. I have not had a loss yet on the VIX. I need to quit saying that because I know I'm just like gonna give myself bad juju or something. But I should just start trading the VIX every day. It feels really good. But those swing trades, I mean, it's not like we get the opportunity to trade the VIX every day, right? Once you're in it, you're in it. So back in March, and then again in April, because that would have spiked enough to get out, and from April to May, so that would have been 2 trades. Maybe got a fill here, but I doubt it. But again, in around the 1st of July, you would have found some profits by August. And now here we are again. Maybe like back in here in mid-September. But yeah, you got to get them when the getting's good. And that's what we want to do right there. It doesn't get any better than that. Oh, let's go take a look at SPY and see where the volatility is at, because we could be getting really close, especially with this gap up this morning. We might have enough, the volatility might drop enough that we can get into an RTS. $13, absolutely. So the RTS is in play.